Hello, my name is Potter Oliver, and this is a strategic analysis of Amazon. To start with an industry overview, Amazon's primary industry is the retail industry. Amazon sells a wide variety of products and services, including Kindles, Fire tablets, Echoes, Rings, and subscription services such as Amazon Prime. Amazon operates within three segments: North America, International, and Amazon Web Services. The main segment that Amazon operates in is the North America segment. It is the largest and best performing segment with revenue of $352,828 million in 2023 and has increased year on year since 2016. The key players in the retail industry, in addition to Amazon, include Walmart and Costco. These three retailers had the highest revenues of any retailer worldwide in 2023, with revenues of $648,125 million, $574,785 million, and $242,290 million, respectively. Beyond the retail industry, Amazon has close rivals in each of its operation segments. In the North American segment, one of Amazon's closest rivals is Walmart. Walmart primarily operates through physical department stores that offer a large selection of products at competitive prices like Amazon. To better compete with Amazon, Walmart has been working to establish an online presence. The company has e-commerce profits of $47.8 billion in the US, an 11% increase from the previous year. Walmart has also incorporated other systems and programs to further compete with Amazon. These collaborations focus on technology and innovation and a loyalty program. Halfway through 2024, Walmart had revenue of $648,125 million, greater than Amazon during the same period. In the international segment, one of Amazon's closest rivals is Alibaba. Alibaba primarily operates in the Chinese market. The company operates via e-commerce and focuses on helping businesses source products directly from manufacturers. Alibaba managed to become a top competitor in the region due to strong e-commerce penetration. In the third quarter of 2021, Alibaba had revenue of $31.14 billion, and halfway through 2024, had revenue of $133,071 million. In the AWS segment, one of Amazon's closest rivals is Microsoft. Microsoft competes with Amazon through its cloud computing service, Azure. Azure held 20% of the total cloud market share in 2022, second only to Amazon. Microsoft Azure has many of the same services as Amazon and a strong set of AI tools. Those tools enable users to build applications containing artificial intelligence. Another strength of Microsoft Azure is its pricing strategy. Its pricing structure was considered to be more attractive than AWS, making it more appealing to users who want more cost control when accessing cloud computing services. A rising trend in the retail industry is the use of artificial intelligence. Retail executives are looking for ways to use AI within their organizations. Two uses for AI in the retail industry include personalization and inventory visibility. AI also has a high value of investment. As of January 2024, the value of investment into AI-centric systems was the second highest in the retail industry after finance. Next, the industry attractiveness. The retail industry is slightly attractive, but there are dangers for companies attempting to enter the industry. Technological advancements such as marketplaces have made it easier for companies to target consumers. The COVID-19 pandemic also caused an increase in online retailing. One example is that online grocery sales were predicted to be $250 billion by 2025, an 8% increase from pre-pandemic levels. The danger in entering the retail industry is that there are many substitute companies/competitors. There are many different department stores, clothing stores, sports stores, online retailers, and more. This means that if a consumer does not like the service or quality of one company, there are plenty of other options where those consumers can shop. During the pandemic, 73% of US consumers tried new shopping behaviors. Consumer loyalty declined for several reasons, including stockouts, price sensitivity, private labels, and an abundance of choices. One critical success factor for the retail industry is the adoption and use of technologies. As mentioned previously, the adoption of new technologies can help new players enter the retail industry. eBay and Etsy have adopted new technologies to establish online marketplaces that allow them to more easily target consumers. To compete with these new companies, already established companies also need to increase their use of technologies to improve the customer experience, stay on top of consumer trends, and maintain customer loyalty. One type of technology that retailers can implement is artificial intelligence. AI can be used to improve inventory visibility so consumers and the company will know what products are in stock and what products are sold out. By using AI, established retailers can match the technology use of the new companies and maintain their customer base. Next, the organizational performance of Amazon. Amazon has several different performance targets focusing on different aspects of its financials. One target is increasing unit sales across their stores. That target can be shown through increases in revenue. A second target is increasing the sales of products and services. This target can be shown through increases in operating income. A third target is turning inventory quickly and collecting payments before they are due. This target can be shown through variability in the inventory turnover ratio. For Amazon's target to increase unit sales, the company has performed very well. Over the past 5 years, 2019 to 2023, Amazon's revenue increased year on year. In 2019, Amazon's revenue was $280,522 million, and in 2023 was $574,785 million. The increases in revenue show that Amazon is achieving this target. For Amazon's target to increase sales of products and services, the company has not performed as well as with the first target. Amazon's operating income has fluctuated over the past 5 years from 2019 to 2023. In 2019, operating income was $14,451 million and increased through 2021. However, operating income decreased greatly in 2022 to $12,248 million. In 2023, this number began to increase again to $36,852 million. Through this data, it can be seen that Amazon has struggled to reach their target of increasing product and service sales. However, if the recent increases in operating income continue, then Amazon may be able to reach their target in the future. For Amazon's target of quick inventory turnover, the company has performed well. From 2019 to 2023, the inventory turnover ratio has varied each year. In 2019, the ratio was 8.79, 2020 was 10.53, 2021 was 9.65, 2022 was 8.62, and 2023 was 9.00. The variability was not drastic, but it was present, which is what Amazon was looking for. This data shows that Amazon is performing well regarding their inventory turnover target. Amazon performed well in achieving its first and third targets, but struggled in reaching its second target of increasing sales of products and services. Next, the organizational growth of Amazon. Amazon has 3 main methods of growth: product expansion, service expansion, and geographic expansion. In terms of product expansion, Amazon began as a book and CD retailer. In 2000, the company started its marketplace that allowed it to sell a wider range of products and enable third-party sellers to sell through Amazon. Today, Amazon is viewed as an everything store, selling almost every type of product imaginable and has a 50% market share in the e-commerce industry. In terms of service expansion, Amazon grew to offer more services beyond online retailing. Amazon launched Amazon Prime in 2005, which gave subscribed consumers 2-day shipping on certain products and access to other services such as Amazon Prime Video and Music. In 2016, Amazon launched its Prime Air service, which used drones to deliver small packages in less than 30 minutes after the order was placed. Amazon's most profitable service expansion was Amazon Web Services. This service, launched in 2006, was a cloud-based computing software that offers software applications, data storage, content delivery, and more. Since its creation, AWS has grown to be the world's largest cloud computing provider. In terms of geographic expansion, Amazon has operations in over a dozen countries, including the US, France, UK, and more. In each of these countries, Amazon has country-specific websites to aid in its operations in each market. For example, in the UK, Amazon's website is amazon.co.uk. Each of these expansion methods enabled Amazon to grow in almost every way. Increased product, service, and geographic options enabled Amazon to cater to all consumers, allowing them to draw in more consumers from competitors and maximize revenue and profits. Overall, Amazon's growth through expansion has seen mixed results. The company had a market cap of $1 trillion in 2019. From 2019 to 2023, Amazon's revenue increased year on year from $280,522 million to $574,785 million. AWS on its own was very profitable as well. In 2018, AWS generated $27 billion in revenue and $7 billion in profit. Despite this financial success, however, Amazon's growth has begun to slow in recent years. AWS growth rate has slowed in recent years as rivals have pushed more aggressively into the cloud computing market, making competition more intense. Amazon also suffers from high costs for maintaining and improving its services, such as Amazon Prime. Amazon's investment into faster delivery times in the US was estimated to be between $800 million and $1 billion. The decline in growth and high costs mean that Amazon may have to look for new avenues to improve growth and profitability in the future. Next, Amazon's competitive advantage. Amazon's competitive strategy allows it to achieve a sustained competitive advantage through its lower costs and faster delivery times. Amazon's cost to serve per unit decreased globally for the first time since 2018 by more than 45 cents per unit year on year in the US. The company also lowered costs by reevaluating its fulfillment network and discovering several ways where costs could be lowered while increasing delivery speed. In terms of delivery speed, Amazon delivered products to consumers at the fastest speeds ever to Prime members in 2023. Over 7 billion products arrived on the same day or the day after they were ordered. The lower cost to serve enables Amazon to invest in further speed improvements and add more products at lower prices. Consumers will be drawn to Amazon due to the company's efforts to keep its prices lower than competitors. Faster delivery times will also attract consumers as they will be able to receive the products they order faster than with competitors. Next, we have the strategic issue. One strategic issue that Amazon has is a decline in organizational growth. As stated previously, Amazon grew through product, service, and geographic expansion. However, despite all the expansion, Amazon's organizational growth, specifically regarding AWS, has begun to decline. Companies such as Microsoft Azure and Google Cloud have been making a stronger push into the cloud computing industry. Amazon Prime has become costly as well, with the investment in making one-day free shipping a reality in the United States estimated to be between $800 million and $1 billion. Not only that, but the company is barely profitable in retail in the US and is losing money internationally. Looking at the company's revenue over the past 5 years, revenue has increased year over year, but the difference in revenue from year to year has decreased. The same is true for AWS. Revenue generated from AWS increased year on year from 2019 to 2023, from $35,026 million to $90,757 million. However, the difference in revenue from the previous year to the next decreased from 2021 to 2023. The declining growth and rising costs raises the issue that Amazon will need to look for new avenues for growth to continue its success in the future. Lastly, we have the recommendation for Amazon. One way in which Amazon can increase its organizational/AWS growth is to partner with various universities and programs to develop and discover new avenues for growth. One of Amazon's competitors, Alibaba, has implemented something similar. In May of 2024, Alibaba signed a Memorandum of Understanding with Lingnan University, with the goal being to promote academic and technological frontiers and develop cloud-based educational tools for programs. Amazon could use a similar approach to boost the growth of its own operations in AWS. The partnerships that Amazon forms do not have to only be in the United States. The company could leverage its vast global network to establish partnerships all over the world. By partnering with universities and programs, Amazon can gain new perspectives and ideas regarding its operations and industries and how it can continue to grow. As mentioned previously, one critical success factor in the retail industry is superior technology use and artificial intelligence. The partnerships could aid in developing new ideas and strategies to grow, take advantage of those factors, and find new ways to implement them through AWS. Also, Amazon's competitive advantage was stated to be through lower costs and faster delivery times. The partnerships could aid in maintaining that advantage by allowing Amazon to discover new ways to innovate and improve its supply chain to keep costs down and increase delivery speeds. Establishing partnerships outside the US could also give Amazon new insight into business and retailing trends in different markets. Amazon could then be able to capitalize on those new trends before competitors can, which could also improve growth. The global cloud computing industry is expected to grow at a rate of 16.7% from 2022 to 2027, reaching a value of $763,484.3 million in 2027. By establishing partnerships with universities and programs, Amazon could put itself in a better position to take advantage of that growth through AWS and grow the other aspects of the organization, such as e-commerce.